All right, I'm Michael Hartzman. Today is Tuesday, January 13th, 2025. And I'm on as always with my partner, Dominic Tavella. Happy New Year, Dom. How are you?
Doing well, Mike. No complaints, and Happy New Year to you and all of our listeners and viewers as well.
I think the statute of limitations for saying Happy New Year ends tomorrow. So we are officially under the radar.
I'm actually happy you mentioned it because actually had somebody go, "Are we still even allowed to say that?" But Happy New Year is always a wonderful thing to say out loud. So even if we stretch it a little bit, Mike, that's not a bad thing.
Yeah, there's a Curb Your Enthusiasm where Larry David goes 3 days, but I think
Well,
that's too short.
one of our favorite series, both of us.
Exactly. So look, there's not much to talk about as terms of the year because the year is brand new, is 1 week old. The trading week was 1 week, but it was a positive week. The Nasdaq was up 1.88. The S&P was up 1.58, and the Dow was up 2.34, which is very positive. And Dom, as I've been saying to my clients for the last week and a half, I started the year optimistic, and now I am cautiously optimistic because, and you and I talked about it this morning, the headline risk I feel, I love your opinion, is I think might start to become real risk. There's a lot going on right now in the world between the action we took in Venezuela, the protests in Iran, which will looks like we may get involved with, and the possibility, and I can't believe I'm saying this one out loud, of us taking over Greenland somehow, and then the administration suing the Fed chief, which as you said this morning, Republicans and Democrats universally thought that's a terrible idea. So there's a lot of variables which are kind of not connected, but all lead back to the White House as the nucleus. And I don't know, it just kind of making me a little uneasy lately as it relates to the markets.
Well, Mike, we talk about headline risk all the time, all right? And at the risk of boring people, headline risk is you turn the TV on, you turn the news on, it's like, oh my God, what's going on out there, right? But if we come back to the beginning of the year, just I guess now 10, 15 days ago, um, the economic data is pretty good.
Very good.
Pretty good,
Yeah.
right? We
Mm-hmm.
got now it's one data point, but the Atlanta Fed is predicting over 5% GDP growth in the economy. We got some inflation data this morning. Good news, bad news, 2.7%. That's not a terrible news number. It's not where the Fed wants it. They want it closer to two. On the other hand, it didn't increase, and we're not seeing dramatic price hikes to the consumer. And I can go on and on with all these data points. My corporate earnings are on schedule to have a terrific year. We have significant tax refunds coming back into the economy in the first quarter. That'll help consumers, that'll help spending. So I can go on with this litany of positive data points. And I don't think it's a surprise that the markets are up 1%, 2% in the first week or so of this year based on the data. And then we turn the news on and oh my God, here we go again, right? And the markets start these roller coaster. I think it's important for us to try to sift through the noise, the news, and go, hey, is kind of relevant here, and what theoretically could have some kind of economic impact, and what, oh, it's just this administration, whether we like it or not, being what they normally usually are, and that's politely disruptive, right? So we're seeing a lot of headline noise, disruption. It is having some effect on these markets. We'll see where it goes, Mike.
And over the years, I think it was Donald Rumsfeld who famously said, "We don't know what we don't know." and it's always geopolitical events that come out of the meteor out of the sky that no one saw coming. And I hope our those who are watching our podcast, not listening to it, to see your face when I just mentioned Greenland, right? I mean, the absurdity of possibly blowing up the NATO alliance over something that is completely avoidable. The U.S. is able to accomplish what they want to in terms of protecting that area and protecting our interests. But that if there ever was a black swan out of nowhere, that would be it, Tom.
Um, Look, we obviously we have spoken about it, and I'll say our viewers and listeners haven't heard it from us, but and we're not political, we're not tied into what the real story is here. But I think one common theme is that this administration probably could have achieved 90+% of their goals in Greenland without the drama, right?
Right.
Without the drama, and so it's the drama that kind of upsets people, upsets markets, upsets our global partners. We don't need it. You look at what happened in Venezuela. It was very surgical. Thank God, no U.S. Military people were harmed. It was very strategic. And in the big scheme of things, it didn't upset the apple cart too much, right? But it certainly had the potential to.
Right.
And that's always the fear factor, right? Something that seems so benign in the beginning, mushrooms, explodes into something really way past what we would hope for, and i.e., it would become a very negative scenario. And there's always outcomes. There's always, in this case, negative outcomes to some of that stuff. So again, the idea that we're looking at these headlines, Mike, and not a little worried, we wouldn't be doing our jobs,
Yeah, look,
frankly.
and what have we been saying forever? An old axiom on Wall Street, and Lord knows we have 1,000 of them, is the market can accept bad news. It does not like the unknown. Because you cannot make an investment decision on what you don't know and on a guess. And again,
You're absolutely right, Mike. Look, and I rattled off some data points, and we joke about this all the time, but they are the leading economic indicators. So there is a method to the madness. We're looking at these data points. We're trying to gauge the strength of the economy and how companies could potentially profit from that, and therefore, where do we want to spread our eggs, right? But when the meteor comes out of the sky, hits you in the back of the head, you can't anticipate that one, right? You can react afterwards, but you can't anticipate it and do something about it. And so you're correct. What frightens the markets the most is the unknown. They can deal with different political parties running the government. They can deal with administrations. They can deal with high interest rate environment, low interest rate, high inflation. They can adjust. They can adapt. But when the meteor comes out of the sky and hits you in the back of the head, kind of tough.
yeah. And I think that's why the Venezuela story, which is not done yet, I think that's why the market kind of handled that one, because other than kind of waiting to see what China might do, because they were the biggest customer of Venezuela, as you said, it was a surgical strike. We didn't lose any American lives. We removed a dictator. I mean, you can make an argument. Most of that, most people would agree with. So the market responded positively to that for the most part.
Yeah, and Mike, we don't want to spend too much time on this particular subject, but you had many Democrats that said, "Hey, we agree with taking a criminal off the world stage, and we agree with giving the Venezuelan people an opportunity, at least, to determine their own destiny." It's what's next that frightens people, right? And that comes full circle to your point. We don't know what's next. We don't know what the unknown is, and therefore, will it be a positive outcome or a negative outcome? And for us to be cautiously optimistic instead of just optimistic, that's the least we can do here, Mike. Least.
And look, as you said, the fundamentals of the economy are not bad. We had good inflation data information this week. I think you mentioned earlier this morning that there's a possibility that some experts are expecting the economy to grow by 5%, which would be phenomenal.
Phenomenal. And no, not any economist we've heard or listened to or pay attention to has even remotely come close to that kind of a number. And that might be a 1 month, 1 quarter arbitrary blip, right? But clearly the economy, Mike, all the meetings we've already done this year, all the meetings that we expect to do this year with the smartest people in the room, do you think one of them will use the recession word?
No,
No. And you can't say that a year ago, right? Where
no.
where we basically had the experts talking probability of between a 40 and 60% chance of a recession. So we are in a good place economically. I think we have the opportunity to continue to get better, but we do have to pay attention to these headlines.
And just for the record, I always feel compelled whenever you bring up what the experts were saying about a recession, you and I were on the record saying no recession in 2025.
Yeah. Yep. And we were fortunate enough we didn't get one, Mike. One of those
Exactly.
where it's not about being right or wrong, it's the damage that it would have done to the economy and to the employment numbers and job creation, everything else that goes bad with a recession. So grateful it didn't happen. And we don't foresee one this year, by the way. But these meteors coming out of the sky do need to be monitored. And hopefully we get through this one too.
So you mentioned earlier the smartest people in the room. So on that note, tonight's guest, Dominic, is one of the smartest people in the room. We have Dr. Bobby Hoffman, who's an associate professor at the University of Central Florida, who specializes in motivational science and solving the mysteries of human behavior. And Lord knows we deal with human behavior on a regular basis. And he wrote a book called The Paradox of Passion: How Rewards Covertly Control Motivation. So I'm really looking forward to his thoughts. And we're going to tie in how motivation and people's investment decisions, there's a shocker, are closely connected. So we'll be right back with Dr. Bobby Hoffman, author of The Paradox of Passion. All right, I'm Michael Hartzman, back with my partner Dominic Tavella on the Lebenthal Report. And our guest this evening is Dr. Bobby Hoffman, author of the new book, was published in October, The Paradox of Passion: How Rewards Covertly Control Motivation. Welcome aboard, Bobby.
It's great to be here. My pleasure. And I
So
think I'm supposed to say Happy New Year.
it's
I'll take
appropriate.
it.
Yes,
I'll
Happy New
take
Year
it.
to
You got
you.
permission. Yes. Go for it.
Yes. So when we were talking before the show, I said to you in looking at your book and reading some of the chapters, I kept thinking about the old expression, if you love what you do, you never work a day in your life. And to me, that was kind of the definition of passion. And I said to you, is that kind of what the book is about, or the opposite of what the book was about? And you gave us a great, really cogent answer. So why don't we just start there? The paradox of passion, and you use the word motivation. How do they come together, and which one's more important? Or maybe they're
Well,
both equally important.
yeah, it's kind of tough to disentangle all of it because motivation is represented in a lot of different ways. Um, the textbook definition is the direction and intensity of your effort. So if you think of that's two components, where you're going and how hard you have your foot on the gas, really. So that's kind of the analogy. And we talk about passion. Passion is an emotion and a feeling of how we feel as a result of our motivation and what we are or are not accomplishing. So it's not necessarily the reason why we do something. So just from a technical perspective, passion is more of like a good feeling about it, because when we are allegedly passionate, we're doing something we love. As you said, work, you love your work. It's meaningful to us. We find it interesting. We're willing to dedicate both time and effort to whatever that task is. And it could be directed towards a hobby, a profession, a person. So we're very enthusiastic, and it's very important for us. But what we discussed earlier, if you think about those emotions and those feelings when we're striving towards a goal or are engaged in an activity, it's not really realistic to believe that we can sustain that alleged passion indefinitely. And why is that? Because we all know, we've all been there, that just like in the world of investment, we experience conditions that are highly conducive to success. Other times, the economy turns and we encounter a bunch of circumstances that are not ideal for our personal motivation, and we wind up going into valleys. So our motivation, like the economy, goes up and down. So my concern is that many people may be operating under a false or unsustainable narrative where they cannot maintain that passion. And what happens, and again, we've all been there, including myself. If you get to these motivational lulls and you're not using the right strategies to address those lulls, you start doubting yourself. You may say, well, why am I not passionate about my job anymore? Why am I not passionate about my relationships, the people that I encounter, the things that I do? I'm going through the motions. So we get this self doubt. And that self doubt leads to frustration, and frustration leads to anxiety. And in the worst cases, we get depressed and we allegedly lose our motivation. That's not what's really happening scientifically in terms of losing motivation, but we tend to not express motivation in a productive way. And it can get us into a lot of trouble because we always have a motivational drive. So that drive shifts from something that may be productive during these lulls to something unproductive. And if Michael and Dominic are like everybody else in the world, you're not feeling so good. So what are you going to do? You're going to go get yourself some ice cream, or you're going to have a drink, or you're going to you know, do. You're just going to sleep. So the passion narrative is not sustainable from a very practical perspective. And not only that, and the reason that the book has a subtitle is because the passion narrative does not consider the physiology and how the brain works. And if we don't consider how the brain works, The brain doesn't really care how you get that so-called passion. It just cares that you get it. So if we don't consider that, we might wind up using the wrong strategies and we get into this downward cycle. So
So let's tie that right into, maybe it's just pure coincidence or pure luck, but here we are, the first of the year, and everybody comes in with all their wishes and
yep.
dreams and resolutions of what they're going to do. And we know scientifically, historically, what happens with those resolutions. But why don't we take the thoughts you just focused on and tie it into not only people making these resolutions, but their ability to keep them?
Well, that's certainly a related topic about goal setting and be able to manage yourself. And it gets pretty complex. You know, most of my students, they come into my course and they think they have motivation figured out. And then in the first 2 weeks, they're like, wow, I didn't know this stuff was so complicated, because we have a series of beliefs about ourselves. And those beliefs about ourselves are very instrumental in the behaviors that we exhibit, the thoughts that we think, and how that behavior manifests in day-to-day activities. And this certainly will tie into investment. So these beliefs that we have, we may be setting our New Year's resolutions because that's kind of the thing we do. You know, it's the renewal, the potential for personal growth and change for the better, that we might not necessarily be committed to in the first place. So what many people will do is they go through the motions of setting these resolutions because that's the popular narrative. So, and that narrative may not be sustainable because it's not coming from within, it's coming from an external source. And it's kind of the same thing with passion, and it even transcends into investment, because the number one most influential belief that we have about ourselves and the world is whether or not we can control our own destiny. And people really fall into these categories of having an internal control belief or an external control belief. Now, I'm not talking about controlling others or being controlled. I'm talking about the ability and the belief that you think you can control your destiny and you can orchestrate a path in life that you decide upon. So that would be an internal control belief, but there's a large majority of the population that has an external control belief and says, you know what? I'm a victim of circumstance. It depends on who you know if you want to be successful. It depends on your economic circumstances if you want to really thrive. It depends on the culture you're in if you want to lose 30 pounds by the end of January. All of these references that I just described to you are externally controlled factors. So if you're making resolutions and you have an external control belief, what happens? Well, you falter, and this is the week of faltering. I know there's a terminology. This is like the bad week. If you make it past today, and I actually literally think it is today, that you'll be successful. If you don't make it past today, you're done, because it's not something that you really important to you, that you value. And we haven't talked about valuation yet. But if you have an external control belief and you think, well, you know, I'm just at the mercy of the world around me and the people around me, then your resolution will likely fail. But there's another key point, and that key point is you have to know the strategies that you will use when you reach the motivational lows. And unfortunately, as I said, a lot of people don't consider how the brain works, and a lot of people operate under false narratives that they hear on YouTube and read on the internet and hear on TikTok that says, hey, you want to be motivated? You know, you have to put a dopamine patch on your arm because that'll solve all your problems. Or you have to be like me and walk over coals and show your resilience and never take a nap. And so there's a ton of really bad information out there, just like there is in the investment world, in terms of which strategies do you use in a particular situation based on your personal beliefs. So you've got a couple of really important issues. Those beliefs dominate how our behaviors, and the success of reaching our goals is really based, at least in part, on the strategies we have and whether or not we're willing to use those.
So just to make sure I understand this correctly, the beliefs would be the passions, right? And then your actions would be the motivation. So I'm assuming that the passion is born first, and that creates the motivation.
Oh, well, not exactly, because as you very well know, and I'll give you some examples, we can demonstrate similar behaviors, but do it for different reasons. So the motivation is the reason for our behavior, which may not be reflective in what we do. So, for example, people invest for a wide variety of reasons. Some people invest for security. Some people invest for because they have high risk tolerance, and I won't necessarily call that investment, more speculation. Some people invest because, again, of external influences and pressure. If you have a family, you are, it's drummed into your head for years, and you have to provide for your family. The whole insurance business is an externally controlled public narrative that says you need to take demonstrative steps for financial security for your family. Okay. So those are three different reasons right there that I've given you for investment, but the same thing applies to just about uh, everything that we do in terms of our behavior. So we can't just look at the behavior. We have to look at what's underneath the behavior. But the real dilemma comes into the picture because passion is just one type of reward. And passion represents how we feel. It doesn't really represent why we do something. You can be passionate because you might make a lot of money as a result of your behavior, or you can be passionate just because you enjoy doing the particular task. Now, I worked as a consultant, and I actually worked on Wall Street for a firm that I will not mention their name. But I wasn't working there because I was really interested in the financial culture. I was working there because I needed certain experience and certain exposure, and I was trying to enhance my long-term reputation. Wasn't necessarily for money, but I had no passion whatsoever. So we have to be really careful in deciphering what that passion represents. You can't just say, I'm just passionate. Why are you passionate? Why are Dominic and Michael conducting the Lebenthal report for years and years and years? Is it to make boatloads of money? Is it because you enjoy doing it? And then I would ask you, well, why do you enjoy doing it? You probably enjoy the reputation that you've had and the story that Dominic told that, oh, I heard you guys are really big on Long Island. For me, that's the kind of the motivation that I have. I like people to say, hey, I sort of heard Hoffman on the Lebenthal report, and he sounded like a really refreshing view of motivation that's different from everybody else. That's more important to me. That's you want to call that passion, go for it. But I call it recognition. So the passion it's just kind of misleading, and it's one type of internal reward. But as the book tells, Passion Paradox tells you, the brain doesn't care. The brain is just as happy eating a cheeseburger as it is making a good investment decision. One takes a little bit more self-control and a little bit more long-term gratification than the other. But neurologically, from what happens if you find that your motivational urge is satisfied by a particular behavior in a particular context, the brain doesn't care. The brain just wants to achieve that satisfaction. So specifically, and we won't get into the neuropsychology of it all, but we keep hearing about dopamine and serotonin and all these drugs that people take to get them off of feeling depressed and frustrated and anxious, they all work on our physiological state and the neuromodulation that's happening in our brain. But ultimately, the brain couldn't care less if you're passionate about your job or you sit in front of the TV with a bag of Fritos and that satisfies your urges.
Bobby, you
Hey
had me
Don,
at the
hey Don,
cheeseburger.
hey Don, Bobby just mentioned the two favorite things you love to do is make investment decisions and have cheeseburgers. How did he know that?
I'm going with the
Right, but what happens if
cheeseburger.
you eat cheeseburgers every day? Here's
But
the thing. This is the problem. You eat those cheeseburgers every single day. You know, the first one doesn't taste, or the second one doesn't taste as good as the third. Excuse me. The
but
second one doesn't taste as good as the first, and the third one doesn't taste as good as the second. So we get into these situations. You can go and be in a downward spiral, and you know that sometimes happens in the investment world. You know, I've got my Robinhood account, and it keeps me very busy. Not necessarily generating tremendous wealth, but generating self confidence in my ability to make the right choices. That's what's important to
Bobby,
me.
I'm curious because, again, I love the word passion here. And especially, again, this time of year, people get very focused. This is what the goal I'm going to achieve. And obviously, some people do and some people don't. Is it a process of how they're wired? I'm not sure. I'm asking a loaded question here. How their brains are wired to achieve success, whether it's losing 10 pounds or running a marathon. Is it that their environment? Is it all of it that comes into the picture? How do we look at ourselves and then obviously the world and go, hey, we want to be more success oriented. How do we make that happen?
Well, we all come to the table with a substantial degree of biology and heredity. There is no escape from that, but it is not an immutable sentence that is that we're unable to change. And depending on the other factors that you mentioned, like our culture, the opportunities we have, the people that we surround ourselves with, the strategies that we know and are willing to use, sometimes we're very motivated for change, but we don't know how, the mechanics of doing it. And our historical pattern and ability to control our own behavior. A lot of people have a difficult time with that, and that comes through practice and coaching. This is why we have executive coaches and why we have all kinds of self-help apps and different approaches that give us the scaffolding or support. Sometimes we do it through a coach, or sometimes we do it even through a spiritual feeling. But you mentioned three really important and crucial elements, and we could talk for hours about each one: the heritable aspects, the ability to use the appropriate strategies at the appropriate times, and what I consider, and I've written a textbook in motivation, and I interviewed a number of celebrities, including one that you'd be very interested in, by the name of Bernie Madoff. Um, but even Bernie, even though he had some very strange beliefs about how the world operates, he was really good at what he did. And he told me, just like a number of very famous people, and this is the first book I wrote in 2015, that the most important influence on their success was having a coach, whether a spiritual coach or an actual coach, somebody to give you feedback about what you're doing, to give you the opportunity to reflect on your behavior and make changes, as opposed to just rushing into things and making snap decisions and relying on so-called intuition. So it's really a combination of the genetics, the strategies, and the support.
Bobby, let's take a break right there. And then when we come back, let's dig a little deeper into investments in particular and what motivates clients. So let's take a break with Dr. Bobby Hoffman, the author of The Paradox of Passion, and we'll be right back. All right, I'm Michael Hartzman, back with my partner, Dominic Tavella, and our guest this evening, Dr. Bobby Hoffman, who's written the new book, The Paradox of Passion: How Rewards Covertly Control Motivation. So, Bobby, let me ask you this. Another axiom that we have on Wall Street, which is one I actually hate, and clients hate it, that the only two things that motivates an investor are greed and fear. Tom, how many times have we heard that? I hate that expression. So, you want to add a little color to that? I'm assuming you would think there's more to investing than two simple emotions of greed and fear.
Yeah, I certainly would, because I wouldn't call that investing. I would call that trading. And if you're a trader, then you're probably motivated by greed or fear. But I would say that that does not apply to most people, because my definition, and this does relate to motivation besides my personal experience. I take the Warren Buffett approach. If you're investing, you don't make an evaluation on that investment every single day. So it doesn't matter what it matters what your long-term goals are. And this relates to motivation and the self-control that I alluded to a little bit earlier. That if you're a opportunistic investor, you set a target. And if you're opportunistic in life, you say, I want to accomplish a particular personal goal, like working in a particular industry or moving to a particular place or having a particular lifestyle. And then you back yourself into taking the steps to reach that goal. So what do? That's where the self-regulatory mechanism, as we call it, comes into place. And that's just a fancy way to say that you're planning, you're monitoring your behaviors, and you're reflecting on what you do to see if you should do something different. So it's a three-step process: planning, monitoring, and evaluating. And we do that same thing in the investment world. I defer to you guys, but if you're saying, what, I want to get a 10% return on this particular investment during this particular time period, you you don't have to worry about market fluctuations, excuse me. Just like when you're achieving a personal goal, you're going to have bad days, right? You're going to be sick sometimes. Sometimes it's going to be bad weather outside, external factors that won't allow you to pursue your goals, but you can still take incremental steps towards the long-term objective. Uh, so I think you have to look at, and this is why I say take the Warren Buffett approach. What we're interested in assets. We're not interested in necessary returns. We know the basic circumstances. So if we're planting seeds and we expect those seeds to grow in 50 days and they grow in 40 days, we're happy. If they grow in 60 days or 70 days, then maybe we have the wrong seeds, or maybe we need to be more realistic in our goals. It has nothing to do with fear and greed unless your motive is strictly financial. And I know for some people it is. And when I say financial, I mean on a short-term basis. Um, I'm as guilty of that as anyone else, because I'll go in and make a trade and say I want to make 5% of my money by the end of the week, and if I do, I'm happy and I'll sell. But if I see market conditions or so I turn on CNBC and I hear some crazy information by our leadership, or some kind of a world event, and I get scared, and I'll sell. But I have my boundaries, and those boundaries apply to personal motivation as well. But ultimately, it all boils down to this self-regulatory behavior, and be willing to accept the fact that we have investment highs and lows, and we have motivational highs and lows, some of which we can control and others we cannot. So let's work on what we can control and that strategy usually winds up paying off in the long term. And as far as investments are concerned, I think the best investment we make is in ourselves, in trying to be better individuals and gain clarity as to what our goals are and be aware of the strategies we use. A lot of people dive headfirst into things and don't know when to cut their losses. And I'm not talking from an investment perspective. I'm talking from a personal perspective. We're subject to a lot of thinking biases, just like we're subject to a lot of snap decisions based on investment advice, because typically it sounds too good to be true. We know it is, but there's a lot of parallels between personal motivation, personal self-development, and financial self-development. It's almost kind of the same thing.
So, Bobby, you've written quite a few books. We should acknowledge that. But what was your motivation in writing this particular book, and what do you hope people get out of it?
Well, my motivation is pretty much consistent along the lines of my all my works. And unfortunately, in the business I'm in and psychology in general, there's a lot of conventional wisdom out there. And that, unfortunately, conventional wisdom is often wrong. So ultimately, I wrote the book and the books to improve people's lives, um, and to realize that there is something called motivational science, which typically has very little to do with motivational advice and what we hear from motivational speakers and all the so-called experts. So it's very important to me that people operate using strategies based on sound evidence, as opposed to strategies that, well, worked for me once, and it's based on my personal experience and my personal opinion, but that doesn't take into account the unique culture that each individual has and the unique experiences that they have, which may not map onto somebody else's perspective. They may be very charismatic, they may be very successful, but that doesn't mean their approach will work for you. So ultimately, it's to get people the good information that they need. And this is why that, I've written 110 articles on psychology today that are available for free. And all of those articles, and you can just go on Psychology Today and search on Bobby Hoffman. My blog is called Motivate. But that's kind of the easy to use information, easy to apply, all strategy based. That says, if I'm in a situation where I'm getting frustrated about my job, like, what do I do? So it's ultimately, I was in business for 22 years. As I said, I worked on Wall Street. I worked at CNBC when they were just a growing organization. I staffed up CNBC.com back in 1999. So I know about your business. That was a lifetime ago. So I'm not in this for the money. I love people that buy my books, but they don't need to do that, because there's a lot of free information out there. But ultimately, I wrote the book to improve people's lives and get them good information that actually is substantiated by science and not personal experience and hearsay.
Bobby, I noticed in your bio you also spent some time either working with or consulting with the NBA.
Yeah.
And professional athletes, to get to that level, I mean, the odds of getting to that level are so minute. So so they're obviously known for their passion and their motivation. If I may ask, were you working for the league, for the front office, or were you actually working with the players?
No, I was working in the back office. Back office for the NBA is in Secaucus, New Jersey, and I was largely responsible for recruiting. I did have some interactions with Adam Silver,
Mm-hmm.
current NBA commissioner, when he was just a fledgling guy in the marketing department. I've heard David Stern yelling, but I never actually worked face to face with athletes. But I think you're right on point when it comes to athletic performance, and I do write a lot about peak performance. That the decisive edge is mental, And that, again, I don't want to sound like a broken record, but it boils down to these self-regulatory strategies, and to be able to know when to shift gears and what's working and what's not working. And athletes are a very, very interesting situation, because the extrinsic motivation, the money is substantial, but when you have a certain amount of compensation, what really matters is how you feel about yourself. And if you believe in your capabilities and your ability to interact on a team basis, that's where your satisfaction comes. If you're making $50 million a year, and you're on a last place team all the time, what? How satisfying is that? Many people would be envious of that situation, but if you're an elite athlete, it takes much more than that just that paycheck. That paycheck becomes almost inconsequential over a period of time. So there's always something more. And that's where the passion narrative comes in. So if you can be passionate about what you do, not necessarily for strictly materialistic reasons, then you can indeed be a world-class athlete. And if you think about the most successful athletes in the world, those are the ones with the decisive mental edge. That especially, you really see it in golf. Just
Well,
these
I love
mechanics.
the parallel, right? You're looking at the best, whether it's basketball or baseball, any one of the major sports. They're very open to coaching and very open to practicing their craft on a daily basis and improving it. I think when we look at the rest of the world, not so much. Why do you think there's resistance outside of maybe some of these more professional,
Yeah,
not just athletes,
that
but
is
even business community?
that's a great point, Dominic. And I tend to say we're blame it on the culture, because we're in a culture of instant gratification, and we're in a culture where mistakes are not necessarily tolerated. Now, I love when my students make mistakes, because that's the best opportunity for them to learn and remember. I almost create situations of hardship for them so they can learn some valuable lessons. But the cultural narrative is to pursue things relentlessly, to get it right away. I want it, and I want it now. So the tolerance we have for those mistakes and things taking time in the general business world is far less than I would say ideal. So, and the narrative is that you should be resilient. I mean, you listen to motivational speakers. Never give up. Just keep going. It doesn't say stop, evaluate what you're doing, and do something differently. Just charge on. I mean, I'm at the University of Central Florida. Our motto is charge on. But that's not necessarily the best way to achieve success. And then we get into those motivational lulls that I alluded to earlier, and you get the self-doubt, and you get the anxiety, and then you start saying, oh, I'm screwing up. And so a lot of it really involves being able to take a step back, look at yourself. What are you doing? I ask people the question, tell me the situation where you were most successful. Why were you more successful in that situation than in others? And the answers that you get, well, I had the right conditions, meaning that you orchestrated the physical environment. So you put yourself in the right room at the right temperature. You got rid of your distractions. You put your phone in another room. You put post-it notes on the top of your monitor, and you were focused, and you sat down there and you worked for 2 hours, and you wrote this wonderful article, or you put together a piece of furniture, or whatever it is. Doesn't matter what the task is, but you understand the environmental circumstances that were conducive to success. But then there's also the psychological circumstances. What did you do to block out intrusive thoughts? Maybe, everybody has problems or challenges in their life, whether it's relationship problems, financial problems. It's really hard to focus on achieving task success when you've got all this other stuff, emotional stuff, evolving in your head. So you have to learn how to channel that that negative energy, so to speak, by using particular strategies. And these are all in my books, especially my book, Hack Your Motivation, which is only strategies and written in a non-academic voice that tells you what to do in these situations and how to actually make it happen. But you can't make any of that happen if you're not thinking about that all the time and being aware of what's contributing to your success or lack of it.
And planning it, right, Bobby?
Yeah.
Planning it. It just
Well,
doesn't,
planning
you
is number
can't pull it
one.
out of thin air.
Right. But a lot of people will just dive into stuff and then they haven't thought about, well, what's going to happen? How will I respond when I reach a certain point and I'm unsuccessful? Because it happens to everyone. And the acknowledgement of this just kind of drives me crazy. Most students will tell me, well, I know I'm not doing it right, but I don't want to ask for help. I mean, how many people are actually willing to ask for help? We don't like to do it because we think it's an acknowledgement of weakness, when in fact, it's an acknowledgement of being successful. And as I mentioned to you earlier, when I wrote my textbook, I interviewed Cheryl Hines, who played Larry David's wife on Curb Your Enthusiasm, and Darren Soto, who's a U.S. Senator, and Nick Lowry. You may remember him on the Kansas City Chiefs when he retired from the NFL. He had the highest accuracy record in football kicking history. And a guy named Alex Torelli, who was a professional poker player. He played 15 poker hands at once online, and this guy made like $3 million by the time he was 20 years old. All these people, every single one of them would tell me the exact same thing, including Madoff, and said, I always had somebody I could turn to. I could always talk about it. I had somebody to be my essentially my mirror that was willing to give me objective feedback and say, hey, buddy, you're screwing up. you need to do things differently, and you need to be open to do that. A lot of people, I said earlier, a lot of people think it's my way or the highway. It's you do it this way or you don't do it.
Hey, Bobby, we are out of time. We literally have 1 minute. So in that 1 minute, number one, thank you. And just tell our listeners where they can get your book.
Oh, my book's available in all of the typical places. The easiest place is Amazon.com. And you search on Bobby Hoffman, author, and you'll see 5 different choices. But all the typical providers, Barnes & Noble and Books A Million and every book site. And if you really want to be smart, then you can get the used editions because those are cheaper. But like I said, Psychology Today has plenty of free information that everybody can use.
The name of the book is The Paradox of Passion, How Rewards Covertly Control Motivation. The author is Dr. Bobby Hoffman. And Bobby, we thank you for your time this evening for a great conversation.
And it's been my pleasure, gentlemen. Thank you very much for the opportunity.
Great way to start the new year. So thanks, Bobby, and best wishes.
Same to you.
And on that note, have a good night, everybody. And Dom and I will be back next week with a new edition of the Lebenthal Report.
Good night, all.